Hi guys, so this is the part two of my previous video. So basically 2025 showed us how fast markets can change, tariffs, shutdown, rate cuts, and extreme volatility was everywhere. So the real question is, what should investors be watching in 2026? I can just summarize what happened in 2025 for you guys and not tell you what to watch at in 2026. So in this video, I'm going to break down the risk, opportunities, and market themes that could define 2026 for you. Not basically telling you what to do, but basically telling you where to look. You understand? So the first one, we have tariffs. Will tariffs stay or get worse? Second, political risk and government stability. Third, Federal Reserve and interest rates. Fourth, recession risk versus soft landing. Fifth, we have a stock market valuation. Six, global risk that can spill into markets. Then seven, we have gold. So let's get into it. Number one, will tariffs stay or get worse? One of the biggest carryover from 2025 into 2026 is the trade policy. What to watch out in 2026? Will tariffs be expanded or reduced? Retaliation from other countries, impact on manufacturing commodities and customer price, market impacts, high tariffs, inflation pressure. Low tariffs relieve rally in stocks. So that means if you're having low tariffs, you'll be having higher stocks, like stocks will be hitting all-time records. So gold tends to perform well during trade uncertainty. That's when if tariffs still go berserk again, gold definitely perform well. So this is one thing that has been bothering me. I saw this November 5th. Yep. Um, Basically, the Supreme Court is saying the Trump the Trump tariffs are illegal. So if it's going to be ruled out, that means all the money that the US government have collected from the tariffs from other countries will be returned back to them throughout the course of this year. So what that simply means is that if the US government is returning back those funds to different countries, they're definitely going to hit a recession. A short-term recession is going to be short if that happens, if the Supreme Court find out if the Trump tariffs are illegal. So that's basically one thing that could trigger a short-term recession in 2026. So that's number one. So let's go to number two. Number two, political risk and government stability. 2025 reminded markets that political gridlock matters. Watch out for budget deadlines, shutdown risk, election-related policy shifts. There's a midterm election this year, so that could also affect the market. So let's see. Market price is uncertainty. Bond yields react to fiscal instability. Foreign investor raises US risk. Political dysfunction does not crash the markets. So don't get that wrong. Political dysfunction, whatever maybe is happening in Democrats or Republicans, it does not crush the market. It can't crush the market, but it does change investor behavior. So investors see that thing that is happening during that whatever political risk happening or political whatever is happening, it always changes behavior, investor behavior. They always tend to change after that. So let's see. You see here in November, the US government experienced its longest shutdown in history after Republicans and Democrats took 43 days to agree on new funding arrangements for the likes of SNAP, food aid, the Department of Agriculture, Congress, and Veterans Affairs throughout September next year. Unfortunately, it didn't go the rest of the government. Beer coppers will run dry from January 30th. So definitely there's still going to be another shutdown if the Republicans and Democrats do not get to agree fully on the funding. There's still going to be another shutdown is still very possible and it's very close. January 30th, we'll know. So before January 30th, so let's just hope they get together and they make a funding arrangement. So the next right now is the Federal Reserve and interest rates. So interest rates remain the backbone of financial markets. No doubt about that. Interest rate controls the financial markets. In fact, I don't know, but it controls it very, very well. It controls it massively. So in 2026, we rate cuts continue, pause, or reverse. Nobody knows. How sticky inflation really is. Fed language and tone changes. Market reactions. How markets react to these things. Rate cuts, stock and risks, asset benefits, rate hikes, pressure on equity, growth thrives when re-rates fall. So that's one thing that happened throughout last year. You see that gold was hitting all-time high, all-time high, all-time high. Gold was hitting all-time high every time. So it was because at some point the rate was falling. Yeah, the rates really fed last year. So that's why you see that gold thrives when re-rates falls. So the Fed does not just move the market, it shapes the sentiment. So that means it does not only just move the market, it's not just the backbone of the market, it also shapes how investor thinks the sentiment. Most people that trade macro, they always intend to think ahead when the Fed chairman or the Fed government always release a rate cut or reverse one. So let's go to number four. Recession risk versus soft landing. Recession risk versus soft landing. After aggressive policy shifts, the big debate for 2026 is simple. Recession or soft landing? Very simple. Recession or soft landing? So, recession, soft landing. So, signals to monitor on that the job weakness, customer spending, corporate earnings, credit defaults. So these are the things you should be watching out for. Markets often price recession before they show in headlines. So that what that means is that the recession always intends to happen in the market before it shows on the headline. So that means you should be watching out for those things. You should be watching out for the job market weakness, customer spending, which is the CPI, corporate earnings, and credit defaults. So you should be watching out for these things, and so you should understand what's happening before a recession occurs, because it always occurs before it shows on the headlines. So let's go to number five. Despite all the chaos, market ended with all-time near highs, the new risk. And also that created new risk. You understand? The market ended with all-time high, also created new risk. So overvaluation in tech and AI stock. So as I said in my previous video, if you haven't seen my previous video, I advise you should. AI has become a very big thing now in the market. AI is one of the things that is controlling the market right now. It's what actually fuels the stock market right now. So the overvaluation in AI, tech and AI stock is that a lot of people values it right now, and a lot of people are so scared that there's a bubble. So if you listen to one of these economists, you listen to them in their podcast and all, you hear you hear them talk about a bubble. So that bubble simply means the more people are depending on AI, the more there's going to be something very, very terrible that's going to happen that will make everyone to realize that AI is bad or whatever. I don't know, but that's just the bubble that has been going on for decades now. So over valuation in tech and AI stock, if the bubble actually burst in 2026, that's cool. That would also trigger a short-term recession. So earnings and growth versus hype. So this thing here, I think a lot of people focus more on the hype than the earnings. If you want to invest in stock, that's why I said you should always focus on the earnings. You should always check what's happening in the company, how they earn their money and how they spend their money. So you should know about the company personally before buying a share with them. So versus the hype, because there's always a noise in the market. There's always these different traders and everybody just talking. That's one thing about the market. The hype also follows the market. So we all need everything. The market spread only few stock rising. That's it. First of all, there is not only just few stocks that are rising. This is also another hype. there are other stocks rising, but just that a lot of people just see S&P 500, Nasdaq, and Dow Jones as the stock that is always doing well. There are many other stocks that are doing well. You just got to research about them. When valuation stretch, even good news can trigger sell off. So that's one thing that can happen in the stock market. And as you can see, the S&P came back to nearly the all-time highs, and it's about 6,858. Now that's crazy. About today is already around about 12.97% today. So number six, yeah, global risk that can split into markets. So US market does not move in isolation. Wherever the US markets are doing, whenever the US government are doing something, it always affects the US market too. So it doesn't move in isolation. Watch out for geopolitical conflicts. That's the trade war happening in different countries. So that's also geopolitical conflicts. Then currency instability, emerging market debit stress, and supply chain disrupts. So emerging market debit stress also, I think that's actually the Trump tariffs ruled out. And I don't know what's going to happen yet. So except I get another news, I'm definitely going to drop it here whenever I know what's happening. And if the tariffs are ruled out, that means the US government is going to return back everything they have took from other countries as the tariffs. So that could also trigger a very, very short down recession. So global shock often hits markets when investors least to expect them. So that's why you should always expect something's going to happen. It's not like you're planning for something bad. It's just you trying to be um, risk management. Yeah, just you trying to use risk management, trying to have a good portfolio at the end of the day. So the final takeaway for 2026. Okay, we have gold. Gold. Yeah. So gold is still eating all-time highs, but this are trigger. These are pull to the downside. It's kind of triggering it's short term, but me, I still believe this is what is happening right now on gold. This is what is happening right now on gold. Yeah, we're still on a very massive bullish trend. We're still on a very massive bullish trend on gold. So I'm going to ignore the noise. Yeah, I'm going to definitely ignore the noise in gold. I can see a lot of traders already saying gold is going to drop, gold is going to drop. I'm going to avoid the noise. This is what I see for gold. This is what I analyze for gold. So basically, gold is one of the safe haven that really help traders this year. If uncertainty continues, safe haven assets stay relevant. So safe haven assets will still stay relevant if uncertainty continue. And right now, there's still uncertainty in the market. So definitely gold is still going to buy. So gold as a hedge against inflation and political risk. Oil reacting to geopolitics, industrial mint tied to global growth. Gold does not need chaos. It just needs uncertainty. Gold does not need chaos to have volatility. It just needs uncertainty to move. So there's still a lot of uncertainty right now in the market. The tariffs, the rates cut, the US government shutdown that can still happen next year. So the uncertainty right now in the market is still very sure. So that means gold is still going to buy. So definitely I'm gonna drop my analysis next week on gold. I'm gonna drop my analysis next week on gold and also do a quick top-down analysis with you guys. So let's move on to the next one. So this is it for So this is it for you guys. So for me, this is the final takeaway. I think if 2025 taught us anything, if 2025 taught us anything, it is the market no longer is driven by fundamentals alone. You really need to be good at technicals. You really need to know how to analyze the market very well, because at the end of the day, if the market is bearish, you can sell. If the market is bullish, you can buy. You understand? But you just got to understand that you are doing this in a short term. So you're basically just targeting a day trade. You're basically just targeting a day trade. So technicals also is also one of the major things that can help you move in this uncertainty policy, uncertainty markets. And technicals will help you very well. So if you don't understand price action very well, you can DM me after you've seen this video. You can DM me or leave a comment below. I can share my video with you that I've shared with my students on Discord. Also, my Discord channel is on my bio on this YouTube. So you can use that to join. And also I will share the video with you guys. And it's a free video. When I mean free, it's free, totally free. So this is the final takeaway for you guys. Politics, market catalysis, the key point you should check. Volatility is the new normal. Now everyone needs volatility. Like right now, that's why a lot of people just don't just bother, they just check on gold. Since the market is uncertainty, so you really do not have to check too much. You just go for a pair that has a low volatility, and you just go to lower time frame. If it's bearish, you sell, you take out your profit. If it's bullish, you buy, you take out your profit. Easy. Risk management matters more than prediction. So that's one thing you should always do. Risk management matters more than prediction. No matter how you're going to predict the market, if you want to be a day trader, you have to understand risk management. So I've always talked about risk management on my videos, and also is also on my video that I'm going to share with you guys. So don't forget to DM me and leave a comment below on this video. So 2026 won't be about avoiding risk. It will be about understanding it. Understand? So 2026 is not about avoiding the risk. You want to run away. You're looking for an asset. You're looking for something to buy, or look for a market to join that you know that yes, you have no risk. It's not going to work that way in 2026. 2026 won't be about avoiding risk. It's going to be about understanding it. You have to understand how to play with this risk. You have to understand how to play like the big boys in this game. Yeah, you have to play like the big boys in this game. These people play with risk. These people play with risk. They are yet to put, or they understand the risk management at the same time the risk. So that's one thing you should understand about risk. If you understand risk management very well, you will understand there are some certain time you risk it. You risk it because you're going to make it. You understand? If you understand risk management and you understand technicals and you understand what's happening out there, it's going to give you an edge in the market. So if you want to know more breakdowns like this, subscribe to my YouTube channel and comment below. What do you think will move the market most in 2020?